How many times have you thought about investing, but stopped yourself because you were scared? I used to look at the stock market like it was this mysterious casino where people either got rich overnight or lost everything. And honestly, for a long time, that fear held me back. The worst part wasn't even the money, it was the paralysis. Every time I thought about investing, my brain would flood with worst-case scenarios. What if I pick the wrong stock? What if the market crashes the day after I invest? What if I never see my money again? But I realized doing nothing is also a decision. If I didn't invest, that money was just going to sit there in my checking account or, let's be honest, get spent on random stuff that had no real value. Shoes I didn't need. DoorDash orders that were gone in 20 minutes. Subscription services I forgot I even had. I remember staring at my savings account, watching inflation slowly eat away at my money while I convinced myself that at least it's safe. Safe from what? Safe from actually growing? Safe from building any real wealth? That safety was costing me thousands in opportunity. So at some point, I had to ask myself, am I going to keep letting fear control me, or am I finally going to build a future for myself? That's when I started looking for something simple, something that wouldn't overwhelm me with charts or demand I sit at a screen all day like a day trader. I wanted something steady, something that could pay me back over time. That's how I found SCHD, the Schwab U.S. Dividend Equity ETF. SCHD isn't some flashy tech stock that could make you rich overnight or broke by lunch. It's a fund full of big, solid companies that pay dividends. It's basically like buying a tiny piece of 103 of America's most reliable dividend-paying companies all at once. Chevron, Verizon, companies that have been paying dividends for decades. Instead of trying to time the market or pick the next Nvidia, I could invest in companies that literally pay me to own them. Every quarter they send dividends straight to my account. I didn't have to be a stock-picking genius. I didn't need to know if Apple was going to outperform this year. All I needed to do was buy SCHD, sit back, and let those dividends start flowing into my account. So if you've been paralyzed by fear, stuck on the sidelines, scared to even start investing, I get it. I was you, but I'm going to show you exactly what it looks like when you actually do it. Because the numbers tell a story that some people never want to share, the messy, imperfect, but ultimately hopeful reality of investing. My SCHD journey started small, really small, and I literally checked my account every hour that first day, watching those tiny fluctuations like they meant something. Well, they didn't. Over time, I kept adding money whenever I could. Once I even threw in an extra $1,000 from a work bonus. They call it dollar cost averaging, but I just called it buying more whenever I wasn't broke. As of right now, I've invested a total of $10,358 into SCHD. That bought me about 378 shares at an average cost of around $27 per share. Today, those shares are worth $10,200. Yeah, you heard that right. I'm down $147 on paper. And you know what? I'm not panicking. I'm not selling. I'm not even stressed about it. Because while my share price has been doing its little dance up and down, SCHD has been quietly depositing money into my account every single quarter. Now, a lot of beginners see that and freak out. They think, oh no, I lost money. This is why I shouldn't invest. But let's slow down here. That's not the full story. Because while my account value is technically down a bit on paper, something way more important has been happening in the background: the dividends. This is where SCHD shines. Over the past year, my SCHD position has paid me $9.10 in September, $37.80 in December, $64.40 in March, $87.99 in June. Yeah, individually those numbers might not seem huge, but let's zoom out. That's already $199.29 that I've received in cash just for holding SCHD. Money I could have spent, sure, but instead I'm letting it reinvest and buy me more shares. That's the magic. That's compounding in action. You see that progression? That's not random. That's my position growing. As I bought more shares throughout the year, each dividend payment got bigger. It's like watching a snowball roll down a hill, except the snowball is made of money and it's rolling into my bank account. I'm literally getting paid to wait. While everyone else is stressing about daily price movements, I'm collecting from some of America's best companies, and I'm also on track to receive about $391 in dividends this year from companies that have been paying dividends longer than I've been alive. Think about that. almost 400 bucks, paid to me while I'm at work, or while I'm traveling, or even while I'm asleep. And I take those dividend payments and buy more SCHD shares. More shares mean bigger dividend payments. Bigger dividend payments mean I can buy even more shares. It's like a money-making machine, but this isn't some get-rich-quick scheme. This is wealth building in slow motion. And honestly, it's kind of addictive once you see it working. Every quarter, I'm literally more excited about dividend day than I am about Christmas. Now, let's talk about that $147 paper loss, because this part really matters. Back when I first started investing, seeing red numbers like that would have messed with my head. I'd lie in bed at night thinking, man, that's a couple weeks worth of groceries. That's a few dinners out. That's a full tank of gas and then some. I used to measure every dollar in terms of what I could have spent it on right now, instead of what it could grow into down the road. But here's what I learned, that $147 isn't real until I sell. And why would I sell a money printing machine? Just because someone else is willing to pay slightly less for it today than I paid yesterday. These companies didn't suddenly stop making money. They didn't stop paying dividends. The only thing that changed was other people's opinions about what my shares are worth. Meanwhile, my dividend payments keep growing. That's real money hitting my account every 3 months, regardless of what the stock price is doing on any random Tuesday. I can't wait for this month's dividend payment. Based on my current position, I'm expecting it to be even bigger than June's $87.99. And then December's dividends will be bigger than that. It's like having a part-time job where I don't have to show up, but the pay keeps getting better. Look, I'm not telling you to go dump your life savings into SCHD tomorrow. I'm not a financial advisor, and this isn't financial advice. But what I am telling you is this: the biggest risk isn't losing money in the market. The biggest risk is letting fear keep you on the sidelines while inflation destroys your purchasing power and you miss years of potential growth. I want you to imagine something for a second. Imagine you had started this a few years earlier. Imagine you've been getting these dividend checks quarter after quarter, reinvesting them, and letting compounding do the heavy lifting. Where would you be today? That's the part that always hits me. Because I wasted years thinking investing was too risky. I thought waiting was safe. But the truth is, waiting is the most expensive decision you can make. Every year I delayed, I was leaving free money on the table. That's why I'm sharing my portfolio with you. Not to brag, not to act like I have all the answers, but to show you that it's real. Investing doesn't have to be scary or complicated. It can literally be as simple as buying SCHD and holding it, and you don't need $10,000 to start. You can buy just one share. The earlier you start, the more time you give those dividends to compound. So if you're scared to invest because you don't know where to start, let me make it simple. Start small, stay consistent, and let something like SCHD do the heavy lifting. You don't need to overcomplicate it. You just need to take the first step.